Hi, I hope you're having a good day. Still a lot of volatility here in Chicago on the Seaman Group floors. Let's move over to protein. Let's talk about hogs, right? I think if you can tell by the way things are trading now, I mean, look at that chart. It does not look good. We like to see things moving from the lower left to the upper right, but boy, oh boy, we've seen that thing tail off. And here's what I think. I think we've gotten the Mexican tariffs and the Chinese tariffs have really kind of taken the mojo or the steam off of the ASF, the African swine fever. So that's going to be taking that off the boil a little bit, and that's really gotten us to where we're at right now. I mean, I would say this, looking at it technically speaking, and you know, when you have these things that muddle you, right? You've got China. What are we going to do about that? We've got Mexico, and I think Mexico could be actually a bigger deal than China, and the market will slowly but surely, I think, wake up to that. And then you've seen this market sell off precipitously. And I would think right now, if you want to take a look at all those things together and then throw a little salt and pepper of some technical analysis on top of that, and I like to go to the technical sometimes. I mean, I favor the fundamentals, but sometimes when the fundamentals are giving me some mixed signals, or there's some things we're trying to read through there, like, again, the Mexican and Chinese tariffs, the African swine fever, we're going to have to go back and maybe get another rule or a measure, another stick to kind of take a look at things. And I think that's when the technicals come in. And the technicals are telling us things are a little bit oversold here, okay? So when you take a look at oversold, you take a look at those geopolitical events, and you take a look at maybe that African swine fever, you've got a lot to worry about there. But it looks as though the price action today is telling me we're trying to find and plumb for a bottom here. So yes, today we finished mixed, right? The deferreds are a little higher on the day, and the fronts are a little lower on the day. And what that's telling me is that down the line, the market's expecting A, some sort of resolution with the tariffs, and B, maybe some sort of resolution with the fever. So you can see how the market thinks by looking at the way these things are trading and how they're settling every day. Because a lot of times you can tell, and it doesn't have to be actually lean hogs that talk about this, you can see the way the curve trades when in the treasuries, the bonds, or even in corn, that it looks as though the risks are going to be gone or taken care of down the road, and the market will trade a little bit more naturally and healthier than they do up front when we've got the risks, so we just don't know what's going to be happening. And that's what's happening in the hogs right now. So the fronts are volatile. They actually settled mixed, right? A few up, few down. But the back deferred months, we call those the back months, were a little bit better on the day. So it looks as though, taking all that into consideration, the market's trying to plumb some depths here to kind of build for a rally. It doesn't look good coming off the back of that chart. That's difficult. So if you want to go back to that chart and look at some levels, if you're a bull, you need it to see through that 87.5 number, then make a move towards 90. I think that would kind of give you some comfort there. And maybe that's what the back months are telling us by trying to plumb those depths and give us something to go on, because those back months, again, were a little higher today while the fronts remained mixed. We'll see what we get for the rest of the week tomorrow and the week ahead.